A special welcome to the representatives from the auditors, PricewaterhouseCoopers. Oh, sorry. And we have with us Mr. Garfield, Reese Garfield. Where did you go to now? Oh, here he is, right here. With this light, it's very hard to see anybody in the audience, so forgive me with that. And also, is Trevor Patterson here from our primary law firm, Patterson Mayer Hamilton? I don't know if Trevor is here, but I hope he'll be here at some point. I'm also pleased to advise you that later in the presentation, we'll have questions that you can put to Mr. Zaka, the CEO of the group, and the auditors, as well as myself and any of the members here, at the board members here at the podium. We may not have time to address every single question in full, but we'll make sure that we get to as many as we can in this forum, and then we're always available to answer questions offline, but we will try to get to everybody. Finally, regarding today's resolutions, we're going to ask you to consider various resolutions at the appropriate time. Warning you of that. All right, let me start with the notice of the meeting. So the notice of the meeting was dispatched to all shareholders on May 5, 2023. The notice was also posted on the Jamaica Stock Exchange's website on May 2, 2023, and on Sagicor Jamaica's Limited's website on that same date. If there is no objection, I seek the permission of the meeting that the notice convening this meeting is to be taken as read. So may I have a motion on that? The notice has been read? Yes, Mr. Staple. You're giving me the motion. Thank you. Thank you very much, Mr. Staple. And can we have a seconder? Thank you, David. David is a seconder. So, no objections. So, all those in favor, if you could say aye. Aye. Any against? Okay, the ayes have it. I declare the motion carried. Thank you very much. I'm also very pleased to have with us here today several of our directors, some of whom are joining us from overseas. And I believe we also have a few online. I don't know if we'll be able to see them, but we may have a few online, and I'll point them out. We have to start, of course, with Dr. the Honorable R. Danny Williams. I believe Danny is online. Dr. Jacqueline Coke-Lloyd. Jackie is here. Dr. Marjorie Fife Campbell. Marjorie over there. Unfortunately, Dr. Doddridge Miller had a family emergency, so he had planned to join us, but he won't be joining us today. Dr. Stephen McNamara. Stephen is here all the way from St. Lucia. Mr. Paul Hanworth, well-known face to all of us here. Mr. Peter Clark joining us from Trinidad. Peter. I believe Mr. Gilbert Paltier is on the line, so he's joining us virtually. Ms. Joanna Banks is also joining virtually. We have Mr. Andre Mousseau, who is the CEO of Sagicor Financial Company. Andre is here from Toronto. Mr. Stephen Facey over there, the only man on the podium without a tie, we've noticed. Mr. Paul Facey, who has so at least one Facey has a tie. Mr. Mahmood Kimji, I don't believe he could join today. And then our very own Mr. Christopher Zaka, the President and CEO there. So you'll note, if you took a chance to read, you'll note on the summarized bios of our annual report, pages 18 to 23, that the members have a wealth of experience, and together there's a good balance of diverse and relevant skill sets. So I feel very good as chairman to have such an effective and capable board. Also present with us today is Mrs. Janice Grant Taff. Janice, could you stand? Janice is our former corporate secretary. I think many of you know her for over the many, many years. And all good things must come to an end. So Mrs. Taff demitted office effective January 31, 2023. She had an extremely decorated career as a Sagicorian, long and tenured role as corporate secretary with the Sagicor Group, where she was first a corporate secretary of Life of Jamaica, between 1997 and 2003, and then after the merger, she was reappointed in 2009 and served us for 14 years in that role. So on behalf of my fellow directors, I wish to extend our heartfelt appreciation for her service, her amazing contribution to the company and its subsidiaries, for which she also served as corporate secretary. So congrats. Thank you very much, Jan. And you're looking fresher and lighter already without all the strain on you. And in a similar vein, I take this time now to acknowledge our new corporate secretary. So that I believe this is Dr. Sharma Taylor's first AGM. Sharma, is that correct? She's sequestered in the corner there. But I welcome her. She's the Vice President and General Counsel of Group Legal. She joined in June 2021 and was appointed February 1, 2023. So we wish her all the best. It's she's taking after her predecessor and doing all the right things. So good to have you aboard, Sharma. Following the resignation of Director Lisa Lake, who demitted office at the end of 2022, Mr. Andre Mousseau and Ms. Joanna Banks were appointed to the board. And their appointments will be put before the meeting this afternoon for approval. That will be a little later. I'd also like to take this opportunity to highlight the excellent work done during the past year by our board committees, and we have many of them between the main board and the subsidiaries. We're grateful to our members for their continued vigilance, their diligence, and their guidance regarding critical governance functions during the year. And all of that resulted in us winning an A rating from the Jamaica Stock Exchange's Governance Index for it's called the CGI for 2022. So well done to all the chairpersons, particularly of our many committees. I'm also pleased to, and because I focus on numbers, I'm very pleased to note that after further review of the initial JSC award, we actually went from 86.5, from the original score of 86.5 all the way up to 87.63. So we're gunning for the AA next year. Right, Sharma, no pressure. And we hope to get the highest score. This is our highest score to date, but we hope to get a higher score still next year and get into that coveted AA rating. So I look forward to that. Okay, so the notice of the agenda of the AGM can be found on page 14 of the annual report, and this contains the agenda items for today's meetings. The first item of ordinary business of the meeting is to receive the audited accounts for the year ended December 31, 2022, and the reports of the directors and auditors thereon. After we take that, I'll then ask our group president and CEO, Mr. Christopher Zaka, to address the meeting, and he's going to provide you with some highlights, kind of high-level highlights of our financial year 2022 results, as well as give a brief update on an important change in our accounting standard from year to year, from 2022 to 2023. And then once Chris finishes that, we will open up the meeting to questions from you folks. And just on a housekeeping with regard to questions, all shareholders who have questions, just please wait to be acknowledged, and then when you start your question, just remember to state your name. The only exception to that rule is Mr. Staple, because everybody knows his name. The second, third, fourth, and fifth items of business will deal with the resolutions to elect and re-elect directors and adopt remuneration of the directors and auditors for the year ended December 31, 2022. And the sixth item of business is the ratification of 2 interim dividend payments made on April 19, 2022 and October 10, 2022. All right, so on to the first item of this afternoon's agenda, which is the last audited financial statements and reports which were contained in the company's annual report for the year ended 31 December 2022. The company's 2022 annual report was lodged with the Jamaica Stock Exchange as per regulation on April 28, 2023, and you can download a copy from our website at any time. So I would like a motion now that the director's report be taken as read. Could I have a proposer? Thank you, Mr. Rose and Mr. Staple. We're going to have to get some more folks involved. Can't monopolize. Those in favor of that Action, thank you. Any against? Okay, ayes have it. Declare the motion carried. I'm now going to invite Garfield Reese, who is our audit manager representative of the auditors, PricewaterhouseCoopers, to read the report of the auditors, to go over the key audit matters for the 2022 period, as highlighted in the financial statement, starting on page 124. Garfield, I gather, is a bit lame, so we're going to hope he can make it for the entire reading. I think he has a severe case of IFRS 17, but he's coping.
Thank you, Mr. Chairman. Good afternoon, everyone. When I went to primary school and my teacher used to force me to read, I never knew why. But now I understand the irony of being an accountant and having to read so much. Independent Auditor's Report to the members of Sagicor Group Jamaica Limited. Report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statements and the standalone financial statements give a true and fair view of the consolidated financial position of Sagicor Group Jamaica Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at 31 December 2022, and of their consolidated and standalone financial performance and their consolidated and standalone cash flows for the year then ended in accordance with international financial reporting standards and requirements of the Jamaican Companies Act. What we have audited. The group's consolidated and standalone financial statements comprise the consolidated statement of financial position as at 31 December 2022, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of change in equity for the year then ended, the consolidated statement of cash flows for the year then ended, the company statement of financial position as at 31 December 2022, the company statement of comprehensive income for the year then ended, the company statement of change in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the financial statements, which include significant accounting policies and other explanatory information. Basis for opinion. We conducted our audit in accordance with international standards on auditing. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit of the consolidated and standalone financial statement section of our report. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Code of Ethics for Professional Accountants, including international independent standards issued by the International Ethics Standard Board for Accountants, ISPA code. We have fulfilled our other ethical responsibilities in accordance with the ISPA code. Our audit approach. As audit scope. As part of designing our audit, we determine materiality and assess the risk of material misstatement in the consolidated and standalone financial statements. In particular, we consider where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audits, we also address the risk of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that presented a risk of material misstatement due to fraud. How we tailored our group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statements as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. The context of our audit is set by the group's major occurrences and business activities for 2022. It was noted that there was a significant reopening of the global economy in 2022, which saw the group's level of business activities similar to pre-pandemic levels. Rising interest rates and inflation also impacted the group's performance. The group entered into two major transactions this year, being the acquisition of a new subsidiary, Alliance Financial Services Limited, AFSL, and the disposal of its interest in Sagicor Real Estate X Fund Limited. There is one new key audit matter come this year in relation to the acquisition of AFSL. We determined the scope of our audit by considering the internal organization of the group and identifying the major components of the audit that have the most significant impact on the financial statements. The group comprised a parent company and 21 reporting components, of which selected 14, including the parent company, which represent the principal business units within the group and are located in Jamaica, the Cayman Islands, and Costa Rica. Full scope audits were performed for the parent and 8 other components, while audits of one or more financial statement line items were performed for 5 further components. The audit work performed covered 95% of the group's total assets and 99% of total revenue net of reinsurance, interest expense, and credit losses. All reporting components were audited by PwC network firms. Throughout the audit, we had regular meetings and correspondence with management and component auditor teams to follow up on the progress of work for all components. The group engagement team performed reviews of working papers for a sample of the component auditors. The group's businesses are organized into 4 primary business segments, being individual lines, employee benefits, commercial banking, and investment banking, as well as other. Geographically, the segments are Jamaica, the Cayman Islands, United States of America, and other, Costa Rica and St. Lucia. The entity disposed of during the year had operations in Jamaica and the United States of America. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. We have determined that there are no key audit matters as it pertains to the company financial statements in our report. Key audit matter. Actuarial methodologies and assumptions used in the valuation of life and health insurance contract liabilities group. Refer to notes 2Q to R, 3B1, and 32 to the financial statement for disclosures of related accounting policies and balances. As at 31 December 2022, total reserves for life and health insurance contracts account for $92.2 billion, or 23% of total liabilities of the group. We focus on this area as it involves significant judgment over uncertain future outcomes, mainly the ultimate total settlement value of long-term policyholder liabilities. Management consider the following as key inputs used to estimate life and health insurance contract liabilities: economic assumptions such as investment return and associated discount rates, and operating assumptions such as mortality and persistency, including consideration of policyholder behavior. Management uses qualified internal actuaries to assist in determining these assumptions and in the valuing of the liabilities. Management experts did not make an explicit assumption for the deaths related to COVID-19 as they deemed COVID-19 to be a shock event. How our audit addressed the key audit matter. Our approach to addressing this matter, with the assistance of our actuarial expert, involved the following procedures, amongst others. Updated our understanding of any changes impacting the assumptions with a focus on mortality, contract lapses, investment return and associated discount rate, operating expenses, all of which are based on entity experience or published industry studies. Evaluated the methodologies and assumptions utilized by management's actuaries, considering industry and component-specific facts and circumstances. Tested the policy master file for completeness and accuracy of the underlying data utilized by management as inputs into the actuarial evaluation. Tested a sample of contracts to assess whether contract features corresponded to the data file as part of our reliability of data test. Challenge management's assertion that COVID-19 is a shock event by examining the current mortality rate for COVID-19 and by considering perspectives on mortality improvements based on medical advances. The results of our procedures indicated that the actuarial methodologies and assumptions used by management in valuation of life and health insurance contract liabilities were not unreasonable. Key audit matter. Valuation of claims payable and incurred but not reported IBNR claims for property and casualty contracts group. Refer to notes 2Q to R, 3B1, and 34 to the financial statements for disclosures of the related accounting policies and balances. As of 31 December 2022, total claims payable and incurred but not reported reserves account for $3 billion, or 0.7% of the total liabilities of the group. The methodologies and assumptions utilized to develop claims payable and IBNR reserves include a significant degree of judgment. The liabilities are based on best estimate ultimate cost of all claims incurred but not settled at a given date, whether reported or not, together with the related claims handling costs. There is generally less information available in relation to these claims, which can result in variability between initial estimates and final settlement. A range of methods may be used to determine these provisions. We focus on this area because underlying these methods are a number of explicit and implicit assumptions relating to the expected settlement values and settlement patterns of claims, and the values determined are subject to complex calculations. How our audit addressed the key audit matter. Our approach to addressing the matter, with assistance of our actuarial expert, involved the following procedures, amongst others. Tested the completeness and accuracy and reliability of the underlying data utilized by management and their external actuarial experts to support the actuarial evaluation. Tested a sample of claims payable by agreeing to supporting documents, including claims adjudication results and approvals and assessors' reports. Performed a methods and assumptions analysis of the actuarial valuation performed by the group's actuary. Evaluated the assumptions used by management and assessed the methodologies used for appropriateness and consistency with established actuarial practice and methodologies used in the prior year. The results of our procedures indicated that management's valuation of claims payable and IBNR for claims for property and casualty contracts was not unreasonable. Key audit matter. IFRS 9 financial instruments, probabilities of default, forward-looking information, and significant increase in credit risk group. Refer to notes 2F, 3B4, 8, and 10 to the financial statements for disclosures of related accounting policies and balances. As at 31 December 2022, loans and leases net of provision for credit losses total $112.7 billion on the group's consolidated statement of financial position. The group's debt securities measured at amortized costs and fair value through other comprehensive income, FVTOCI, total $255.4 billion. Overall, these exposures represent 71% of total assets in aggregate. The impairment provision recorded under the IFRS 9 expected credit loss ECL model amounted to $1.8 billion for loans and leases and $0.62 billion for debt securities. The IFRS 9 impairment model takes into account reasonable and supportable forward-looking information as well as probabilities of default, PDs. PDs represent the likelihood of a borrower defaulting on its obligation over the next 12 months or over the remaining lifetime of the obligation. The 12-month and lifetime PDs are determined differently for loans and leases and debt securities. Beg your pardon. For loans and leases, management determined the PDs are developed based on the group's specific historical default rates for each industry classification. In performing historical analyses, management identified economic variables impacting credit risk and ECLs for each portfolio. Various scenarios were identified on weightings assigned using macroeconomic factors as well as management's experience and judgment. For debt securities, including sovereign and corporate investments, PDs are developed by reference to the external data collated by Standard & Poor's S&P with specific adjustments for industry and country-specific risks where necessary. Management also performs scenario analysis to determine the impact of future economic conditions on the PDs in the countries and industries where the group holds debt securities. A macroeconomic indicator is determined, which is statistically linked to the credit risk of the sovereign exposure and or corporate exposure. We focus on this area because of the complexity of the techniques used to determine PDs and the number of significant judgments made by management regarding possible future economic scenarios. We further focus on management's assessment of a significant increase in credit risk, SICR, as well as stage migrations, as stage migrations can materially impact ECLs. How our audit addressed the key audit matter. Our approach to addressing the matter involved the following procedures, amongst others. Updated our understanding of management's ECL model, including any changes to source data and assumptions, and tested the mathematical integrity of the model. Evaluated the design and the operating effectiveness of certain relevant controls over forward-looking information and SICR in the ECL determination by performing inquiries with management and inspecting the evaluation, review, and approval of key assumptions, judgments, and forward-looking information. Evaluated, with assistance of our specialists for both loans and leases and debt securities, the appropriateness of management's judgments pertaining to forward-looking information, including macroeconomic factors and the basis of the multiple economic scenarios used. Sensitized the various inputs and assumptions as part of our reasonableness test. Evaluated the reasonableness of management's judgments pertaining to PD, SICR, and forward-looking information, including macroeconomic factors. Loans and leases. Tested the completeness and accuracy of the historical data used on a sample basis by agreeing the details of the customer payment profile to source documents. Tested the staging of a sample of loans by reference to the number of days outstanding on the loan. tested the critical data fields used in the ECL model for the PD determinations such as default date, effective interest rate, write-off data, and loan by type by tracing to data source documents. Debt securities. Tested the reliability of the source data used to determine the PDs in the model by corroborating the data to external public information where available. Tested the critical data fields used in the ECL model for the PD determination, such as the credit rating and date of default, if any, and the type of debt security by tracing data back to source documents. SICR, loans and leases and debt securities. For debt securities only, tested on a sample basis the accuracy of the initial credit risk and the credit risk at the reporting date, using rating agency definitions of investment grade, and evaluated the appropriateness of the group stage migration applied to borrowers. Performed an independent qualitative assessment for a sample of borrowers to determine whether there was any adverse public information affecting the criteria used to perform the staging. Changes to the weighting scenario for forward-looking information. Evaluated the reasonableness of the increase in the weighting used for worst-case scenario by agreeing forward-looking economic information to external sources published or pronounced by reputable third parties. Sensitize the probability weightings used in the ECL calculation. The results of our procedures indicated that the assumptions used by management for determining the probabilities of default, significant decrease in credit risk, and forward-looking information were not unreasonable. Key audit matter, goodwill impairment, group. Refer to notes 2M1, 3B, 6, and 17 to the financial statements for disclosures related to the accounting policies and balances. The carrying value of goodwill is $5.7 billion, or 1.1% of the total assets as of 31 December 2022. Additional goodwill of $2.7 billion was recognized during the year as a result of the group's acquisition of Alliance Financial Services Limited. Management performed goodwill impairment assessments using a fair value less cost to sell approach, FVLCS, to derive the recoverable amount of the life insurance industry-related cash-generating units, and the value in use approach, VIU, to determine the recoverable amount of the non-life insurance-related CGUs, as these are respectively considered the higher value model in each of the components. The VIU approach is based on discounted cash flows, and the FVLCS is based on capitalized earnings approach. In performing these assessments, management were assisted by valuation experts where required. Both approaches cover a 3-year period. We focus on this area as the determination of the carrying value of the goodwill requires management judgment and estimation, and the assessment remains sensitive to reasonable possible changes in key assumptions, including earnings multiples for the FVLCS method, earnings growth rate for the VIU method, and discount rates for the VIU method. How our audit addressed the key audit matter. Our approach to addressing the matter involved the following procedures amongst others. Updated our understanding of management's approach to performing their annual impairment assessments, evaluated management's future cash flow forecasts, and updated our understanding of the process by which they were developed. Compared previous forecasts to actual results to assess the performance of the business and the extent to which reliance can be placed on management's ability to forecast. Evaluated the forecasts used in evaluation models against the board-approved business plans and assessed whether the key assumptions were subject to oversight from the board of directors. Tested the assumptions and methodologies used, in particular those relating to earnings multiples, earnings growth rate, and discount rate, with the assistance of our valuation expert as follows. Evaluated these assumptions with reference to valuations and performance forecasts of similar companies. Compared the key assumptions to externally derived data were available, including industry betas, equity and market risk premiums, risk-free rates, macroeconomic indicators, and industry growth rates. Applied sensitivities in evaluating the director's assessment of planned growth in cash flows. Tested the valuation model calculation for mathematical accuracy. Based on the work performed, management's assumptions used in the goodwill impairment assessments were, in our view, not unreasonable. Business combination group. Refer to notes 2B, 3B, 7, and 56 to the financial statements for disclosures and related accounting policies and balances. During the year, the group acquired 100% of the issued share capital of Alliance Financial Services, AFSL, for a total consideration of $3.3 billion. As a result of the transaction and certain changes to the composition of AFSL's board of directors, management concluded that it controlled AFSL and consequently that AFSL became a subsidiary of the group. The accounting for the acquisition was a key audit matter given the significance of the transaction and the financial and operational impacts of the group. We focus on this area due to the nature of business combinations, the requirements of which can be complex and require management to exercise judgment in determining certain estimates. The complex judgments include determining, identifying, and valuing the fair value of intangible assets acquired. The group was assisted by an external valuation expert in the process. Our approach to addressing the matter with the assurance of our valuation expert involved the following procedures, amongst others. Evaluated the application of the valuation methodologies utilized to derive the fair value of the identified intangible assets. Tested the reasonableness of the valuation assumptions and inputs by referencing historical information and management's cash flow projections, supporting documents and information, corroborating revenue growth rates, margins, attrition rates, expense forecasts, capital and tax rates, by comparison to historical information as well as independent economical and statistical data, independently deriving a discount rate which would be applicable to market participants and comparing to that using the calculations, and agreeing the remaining useful lives of each intangible asset identified to the period over which the cash flows are expected to be generated. Tested the mathematical accuracy of management's discounted cash flows by reperforming the underlying calculations, performed a sensitivity analysis on certain of management's assumptions and inputs, assessed the competence and capability of management's valuation expert. Based on the procedures performed, management's assumptions and accounting for the acquisition were not unreasonable. Other information. Management is responsible for the other information. The other information comprises the annual report but does not include the consolidated and standalone financial statements or auditor's report thereon, which are expected to be made available to us after the date of our auditor's report. Our opinion on the consolidated and standalone financial statements does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the information identified above when it becomes available and, in so doing, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, of our knowledge obtained in the audit, or otherwise appears to be misstated. Materially misstated, I beg your pardon. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS and with the requirements of the Jamaican Companies Act. And for such internal control as management determines is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatement due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for assessing the group's and the company's ability to contain as a going concern, disclosing as applicable matters related to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group or the company, or to cease operations, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and company's financial reporting process. Auditor's responsibility for the audit of the consolidated and standalone financial statements. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs would always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered material if, individually or in the aggregate, they could reasonably be expected to influence economic decisions of users taken on the basis of these consolidated and standalone financial statements. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain, thank you, sir. As part of an audit in accordance with ISAs, we exercise professional judgment and maintain professional skepticism through the audit. We also identify and assess the risk of material misstatement of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtained audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omissions, misrepresentations, and/or override of controls. Obtaining an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group's and company's internal control. Evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and thank you, sir. He's usually this nice to me during the audit as well. Evaluate the appropriateness of accounting policies used and reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management's use of the going concern base of accounting and, based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cause significant doubt on the group's or company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the required disclosures in the consolidated and standalone financial statements, or if such disclosures are inadequate, to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or company to cease to operate as a going concern. Evaluate overall presentation, structure, and content of consolidated and standalone financial statements, including the disclosures, and whether the consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. Obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated financial statements. We are responsible for the direction, supervision, and performance of the group audit. We remain solely responsible for audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope and timing of the audit and significant findings, including a significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence, and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and where applicable, actions taken to eliminate threats or safeguards applied. For matters communicated with those charged with governance, we determine those matters that were of most significance in the audit of the consolidated and standalone financial statements of the current period, and these are key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when in extremely rare circumstances we determine that the matter should not be communicated in our report because of the adverse consequences of doing so would result in, the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefits of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all the information and explanations which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appears from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Garfield Rees. PricewaterhouseCoopers Chartered Accountants, 1 March 2023, Kingston, Jamaica, and I thank you.
Thank you, Garfield. I figured if there were 2 more key audit matters, we may have had to arrange an IV for him to keep going. So thank you, Garfield. The audited accounts for the year ended December 31, 2022, and the reports of the directors and auditors were circulated and are now before the meeting for discussion. However, before the resolution is put to the meeting, I'd like to invite the President and CEO, Mr. Zaka, to address you.
Thank you, Chairman. Good afternoon, ladies and gentlemen. After that tremendous performance, I am going to read our financial statements word for word, all 150 pages of them, if that's okay. Not okay, all right. Let me start by welcoming our board of directors, the members here present, and the members online. A very supportive and forward-thinking board. And the senior leadership team and the rest of the team are very happy that we have such a powerful board. Let me in particular welcome our overseas directors who have physically joined us here today. Mr. Peter Clark, who chairs our audit committee from Trinidad. Mr. Stephen McNamara from St. Lucia, a very long-standing member of our board. And in particular, if you don't mind, the new CEO of Sagicor Financial Company, our parent company, Mr. Andre Musso. And if you'll bear with me, I'd like to just speak to the members of the senior leadership team who are here today, starting from my left, going to the right. Karen Scott Dixon, Head of Risk and Compliance, VP, Vice President, newly minted. Our Senior Vice President of Group IT and Operations, Mr. Howard, and Insurance Operations, Howard Gordon. Senior Vice President, Group Treasury Asset Management, Donette Scarlett. New kid on the block, the CEO of Alliance Financial, Omar Brown. Chief Revenue Officer Insurance, Mr. Mark Chisholm, and Executive Vice President, EVP and Chief Executive Officer of Sagicor Bank, Chauvel Johnson Cunningham. EVP and Chief Technical Officer and Insurance Operations, Mr. Willard Brown. CEO and Senior Vice President, Sagicor Investments, Tara Nunez. Mr. Carl Williams is the second row. They fill up the first row, you're shy. Executive Vice President, Shared Services. And last but by no means, Mr. Andre Holong, our Chief Financial Officer. And there are so many other members, valuable members of the team here, and I welcome you all. I want to also acknowledge the presence of our appointed independent actuary, Janet Sharp. Welcome, ma'am. So, in my presentation today, I go through a 2022 full-year financial review, talk about individual business units, talk about our stock market performance, which as shareholders we are all very interested in, our corporate social responsibility and our outlook for the future. Can I also welcome Mr. Trevor Patterson, our significant external counsel. I want to say that so impact, innovation, transformation, driving the business. And I want to welcome Alliance Financial Services up front, the new member of the family. We acquired them in 2022 April, 100%. They are a Cambio and remittance, leading Cambio and remittance service provider in Jamaica, one of the leading ones. And it aligned with our overall strategy for growth. It allows us far more leverage in the foreign exchange market to complement what Chauvel and her team are doing, expands our product offerings to clients, and leads the way for different new business segments and products, as well as distribution channels for the rest of our group business through their 100 and odd sub-agents. AFSL has achieved a few milestones post-acquisition, including almost a 50% agent network expansion through a partnership with Unicoma Courts Jamaica. So well done, Omar. Our organization structure, as you can see, we're a multi-headed hydra, and growing every day. The new addition there would be Sagicor Investments Cayman, which has started, and I'll speak to that last year, September, October, I think, and of course, Alliance Financial. So $16.4 billion in profit last year. And let me say this, we've gone through 4 years of hell, right? 3 years of COVID, a year last year of inflation, high interest rates, liquidity crunches, and general volatility in asset markets. And it is a credit to the team, and I hope that our shareholders are as proud of our team as the board is, and I am, in terms of our resilience, our giving back to our communities, and you're going to hear more about CSR as I go along, as well as helping to build our lovely country of Jamaica. So give them all a round of applause, please. So it was a 6% reduction over the prior year, but given the turbulence we faced, it was, in my view, a creditable performance. Revenues were down over prior year, but well above 2020, and back above pre-COVID 2019. The main difference between 22 and the previous year was in terms of our revenues from gains of sale of assets and trading income, which were vastly impaired, or reduced is the better word, because of poor asset quality, poor pricing in the market due to the macroeconomic situation globally and in Jamaica. Revenues, you can see there, individual life and employee benefits constituted 64% of our revenues in 2022. Commercial banking stepping up, congrats Chauvel, from 15 year before to 18%. Headwinds in investment banking, and I'll speak a bit more about that and other. Our stockholder equity, down a bit, but given what has happened to asset prices, and especially in the fixed income asset classes globally, and certainly Jamaica is no different, an amazing performance that we were able pretty much to hold our equity constant, literally constant. Our group efficiency still very good at 34%, but again impaired by the fact that our revenues, Andre, were reduced because of a lack of trading income, trading gains, etc. The financial metrics are there. I think I've been through most of them. It's important to say that the balance sheet assets are 519 billion. The earnings per stock unit, well above $4. ROE in these times, a very good result of 14%. And the stockholder equity we spoke of. And I'd like to especially point out to shareholders that we continue and have not missed a beat in terms of paying dividends on a regular basis at Sagicor Group Jamaica, and $1.60 in 2022. We're very strongly rated. AM Best, which is a global insurance rating agency, rates us as excellent with a stable outlook. CARICRIS rated us as JMAA at the group level, which is investment grade with a stable outlook. And Sagicor, sorry, that's Sagicor Life. Sagicor Group, again, highly rated by CARICRIS with stable outlooks. And most importantly, in our national scale local currency rating, we were rated JMAA, which is the highest rating that is possible in the Jamaica national scale local currency rating. So I go to the business unit performance, and you see the word innovative bold, because that's what we are all about across the business lines. Again, individual life employee benefits a substantial part of our profit, 78%. Sagicor Bank climbing again, 20%, and Sagicor Investments, 7%. In the individual insurance segment, we achieved close to $9 billion in profit in 2022, and they were driven, those results, by exceptional new business sales and improved conservation of the in-force block of policies. And in 2022, the division's block of in-force policies grew by 3%. Net premium income of individual insurance lines was $33.4 billion, 8% higher than previous year, and it still has a dominant market share of 64% in the Jamaican market. And we're not just about money, we're about serving our clients, and we launched a pap smear testing facility for our female clients to enhance the client experience for our clients. Employee benefits achieved $4.1 billion in profit, 11% over the previous year. Group health and group life premiums were double-digit percentages above the previous year. New business in annuities and group life and health portfolios were 30% higher than the previous year. And this segment was very leading the charge in terms of our digital and digital agenda and digitalization roadmap through their Sagicor Connect, which is a customer service platform, automation of benefit payments, and a source of great pride to us, facial recognition technology for our pensioners, where now our pensioners, and it is in production now and being fully rolled out, pensioners no longer have to get a justice of the peace or an attorney to say that they're still alive and go through all of that trauma on a regular basis. Pick up the phone, go into the app, prove that you're alive by having a facial recognition. Give them a round of applause, please. So, Sagicor Bank, continuing its steady improvement over the years, and a great credit to Chauvel and her team, $3.29 billion in net profit, an improvement of over 2021. Total assets approaching $200 billion, and they were 10% over the total assets of the previous year, December. Loan portfolio grew double digits, 17%. Deposits grew 9.2% year over year. And in terms of a poor economic situation, higher interest rates, volatility, they reduced their expected credit losses by $567 million through very prudent management of their liability, of their credit portfolio. Sagicor Investments, a very tough year for all investment banks globally. They did $1.2 billion in profit, and it was impacted by, as I said, macroeconomic conditions that negatively impacted the entire industry. There were a few bright spots. We opened full operations at Sagicor Investments Cayman Limited, and we just opened the office 2 weeks ago in Cayman, and we have a lot of high expectations for Sagicor Cayman, Investments Cayman. They also raised and closed the US $221 million raise for NFE South Jamaica last year, and that would be one of the largest private placements in Jamaica's history. And our asset management segment through our unit trust, Sigma Unit Trusts, continues to lead the market with a 40% market share. Alliance, as we spoke about, restarted operations April 4th. They have diversified our product offerings into money services. Total revenue amounted to $700 million for 9 months, and that was from starting from zero after being shut down for 6 months. And they have rebuilt their agency network by the end of the year to 92 agents and 35 new Cambia relationships. And of course, we're expecting aggressive growth in 2023. Other interests, our 60% stake in our General Insurer Advantage General Insurance, it achieved 300 plus million in profit and had our total revenue of 4.3 billion, which was an increase over 2021. And we have a strategy of growing our non-motor portfolio, which is also it's also coming to fruition. Costa Rica, our joint venture there, it had almost $6 million in profit. That's 900 million Jamaican. And for a small company that started just a few years ago, it has really grown into a tremendous contributor to our bottom line and gives us confidence that there is a way to replicate this model in the Central American markets. And we are continuously looking at that in terms of the most appropriate way to do that. Off balance sheet, so our Sigma trusts, our Sigma unit trusts and our pension funds and our policyholder funds in our segregated funds had challenges and were impacted by the global environment. However, there were some bright spots. Our Rail Growth, Sigma Rail Growth and Sigma Global Venture provided returns of 13.8% and 10.6% respectively for the calendar year. And of course, in our pooled pension funds, the CPI fund generated close to 10% returns. Our capital adequacy is strong. Our life capital adequacy, well above regulatory requirements, as well as our internal benchmarks. Sagicor Bank, well above the regulatory capital. Sagicor Investments, comfortably above. Sagicor Life in Cayman, way above. And Advantage General, well above. So, in terms of our capital, very strong across the various business lines, as well as our jurisdictions in various countries. And just to add that at the end of December, we had 42 billion in cash and near cash, so our liquidity is unquestionable and very, very strong. So how have we levered these strengths and capitalized on our opportunities? And we talk about stock market performance. And I am very proud that we are now, this slide says largest financial conglomerate on the stock exchange, Jamaica JSE. But it's really the largest of any company on the JSE. So give us a round of applause, please. Our profit remains second to the main player in terms of profits there. You never know, though. So let's talk about the culture. And culture is so much, so very important to us at Sagicor Jamaica, as it is with the wider Sagicor across the globe. Our culture is to transform the team members and their whole approach to motivation and to being cutting edge in terms of what they do. So our client satisfaction, 47.6 net promoter score. Those of you that are aware of net promoter scores globally, this is at the top. This is really first class. We have other metrics too, and we're building out our measurement of client service and have embedded client service scores and targets into all the team members' scorecards, which affect their compensation on an annual basis. And as you see there, we have a number of metrics where we're constantly improving every year. Group HR, it's overseen now by our Executive Vice President, Shared Services, and headed by Coretta Foster, and they're working tirelessly to optimize the people in the company. And as I said, driving a culture that attracts, engages, and retains. Jackie, as an HR specialist, doctor, you will agree that we have a strategy of retaining and driving a culture that attracts, engages, and retains the best talent in the industry. Also, I have to add, technology is shifting the demands on our people and speaking to new skill requirements, new ways to think about doing business. And again, our HR team and our leadership team are very focused on training and attracting the best talent possible to drive the changes in technology. Team welfare, so important, and recognition, and you'll see there it is an integral part of our DNA. Team wellness. So, in COVID it became very clear to us that wellness is so important to our clients, and by far it is very important to our team. So we launched a Sage Hub last year. It's a co-working space where people can book space to do work, collaborate, have nooks, office rentals, and also all our training is now done in our Sage Hub in-house. We facilitated resilient senior leadership through upskilling of our people leaders, and we have competitively positioned Sagicor to attract and retain talent. And of course, at the core of that is service delivery, not just to our clients, but internally. And we have measures and metrics around delivering service internally, which are brand new and have been rolled out fully now this year in terms of, again, determining the performance of our team and various service delivery units within the group to serve each other within the group. Few highlights additional. PriceSmart partnership launched in April. We are now the dominant provider of credit card services within PriceSmart and have launched a jointly branded Visa card with PriceSmart, which is really growing very fast. We launched a new product as a collaboration between Life and Bank, which is the CareShield product, which offers credit card clients insurance coverage for things like critical illness, etc. And our pride and joy, in 22 we raised 52 million. We did a little better this year, 100 million, call it 100, right? But 52 last year was a record at the time. Caring, inspiring, and service. You see there, our vision, our mission statement is that we're committed to improving the lives of the people in the communities in which we operate, starting with Sigma. You see all the stuff we do there, 33 million in scholarships, 25 million in basic school renovation, on and on and on again. A very special one for us is that Joytown community support, where it is a whole transformation of students in the Trenchtown community, something that is near and dear to your heart. Big investment in education, the scholarships, the Adopt a School programs. Again, Joytown, you'll see it there. It's a behavior modification school program that we support significantly, and it engages high school students in Trenchtown, giving them academic support, providing them with life skills and conflict resolution. And they have made remarkable performance. It's really heartwarming. ESG, we embrace environmentally sustainable business practices. And today, when we were talking, Mr. Mousseau made a very important point that Sagicor globally, and that Sagicor is 160 years old, 180 years old, from day one has embraced ESG, long before it was a thing. So we're all about sustainable practices, serving our communities, diversity in our teams, etc. And we go to Future Ready Now. That's our motto as of our blast off in January. And we have to be future ready now. So here are our main planks of strategy. One, digitally transform the business. We have a fully laid out digital roadmap. We collaborate very carefully with our sister companies across the Sagicor universe. We have set up an agile lab, and it's about help me now. People, process, and technology. And the people side is not just internal people, it is also serving our clients digitally, removing pain points so that they want to stay with us. They get the value from dealing with us. And as I said, it is the restructuring last year where we brought in Howard to drive digitalization and gave Willard overall group oversight is really paying off because the team is one team and they're all committed to it. 2, generate and grow revenue in new ways, so new products, Care Shield. 3, and we're always developing new products. 3, our clients, intimacy and loyalty through relationships. Relationships are the core of the Sagicor way in terms of starting as life insurance. Without relationships, you get nowhere. And we've expanded that to all our business lines. 4, I spoke about retaining and attracting the best talent. 5, expanding the geographic footprint. Sagicor Cayman, we're looking at Guyana. We have sent 2 missions there, and we have established partnerships and relationships there. And of course, I spoke about Costa Rica and how are we going to build out that model and duplicate it and, scale it as time goes by. And digital is not just about bells and whistles on the front end. The back end means no paper and improving our efficiencies, turnarounds quickly in terms of things like, I'll just give you an example, loan adjudication, underwriting for life insurance, and there are so many other things we're doing to improve our efficiencies. So now, IFRS 17. Mr. Jackson is here, no? Where are you, sir? Oh, there you are. Mr. Jackson, we shared some information with him. He spoke to it in the newspaper today, as did the Observer previously. And this standard is the most significant accounting standard change that has ever taken place in the insurance industry. It is applicable globally. Almost every country in the world has been required to adopt this new standard as of January 1st this year. And it establishes new principles for recognition, presentation, and measurement, and how we disclose our insurance contracts and the results, the financial results. Importantly, IFRS 17 does not affect the underlying fundamentals of our business, our strategy, or our operations. What it does do is it improves transparency for the sources of profit, allows investors such as yourselves to see exactly what is happening in the business, and provides a greater degree of stability and predictability to underlying long-term insurance contract earnings. And the 44 billion, Mr. Staple, we had at December, January 1st with the new standard, we still had the exact 44 billion. It didn't change. So the fundamental economics and cash flow remain. Also important is that the other business lines, and we're such a diverse group, so that asset prices don't do well in investments, insurance do better because of whatever reason, etc., etc. But our asset management business, our commercial banking business, our investment banking business, and our cambio and remittance businesses are unaffected by IFRS 17. Also, the effect on long-term insurance and short-term insurance. So long-term insurance includes annuities and traditional individual life products as well as universal life products. And short-term includes group health, group life, and general insurance such as Advantage General. The impact on the short term, although it causes major changes in how you present the numbers, is not material in any way, and in many cases has improved the results in the short-term business. So the major impact in terms of the numbers is on the long term. A big change for us in the new standard is that we used to reflect changes in asset pricing, such as government bonds, investment grade corporate bonds. That used to go through financials through other comprehensive income and not through the P&L. So under this standard, we have elected to take them through the P&L. And that will mean it's hard to compare the past with the present, but in our view is a much more transparent and way to reduce volatility. The contractual service margin. So there was a thing that said the business has shrunk, the insurance business. It didn't shrink. The assets are the exact same number, right? The business has not shrunk. What has happened in 17 is that previously profits were recognized when you sold the insurance policy, individual life mainly. You took the present value of all the cash flows throughout the life of the policy to your P&L today. So if you sell a policy today, tomorrow you book the full. Now that moves into the CSM, and each year you get a piece of it throughout the life of the policy, and there are endless formulas for that. So when you look at the capital of a life insurance company, you have to look at the retained earnings plus the CSM. You can't look at them separately anymore. There was no such thing as CSM. So you must look at the sum of the two, because the CSM represents like a savings account for the insurance business. And as that CSM grows, so does the insurance business grow. So globally, investors are going to be looking at growth in CSM in insurance as an important metric as to value creation and how good an investment an insurance company is. Outlook. We're resilient, we have the best team, and we maintain an unwaveringly positive outlook as we navigate and are nimble and deal with whatever good and bad comes our way. And we're consistent and we're innovative, and that is the core of our business. And we're always looking for new opportunities. And we will continue to strategically position ourselves to optimize, grow, and deliver exceptional value to our clients and stakeholders. Thank you very much.
All right. Thank you, Mr. Zacco. Okay, now this is, ladies and gentlemen, this is your time to shine. We're going to ask for questions from the floor. And you cannot just ask myself or Mr. Zacco on the board, but you can also direct questions if you'd like to the auditors. Garfield is here. So, just a quick reminder, wait to be acknowledged and then state your name before making or putting your question forward. So, Mr. Rose, first, okay. Yeah, and we have two mics, sorry. So on this side of the room and on that side.
David, a shareholder, mic working? All right. To you, Mr. Chair. This is directed towards the CEO for Sagicor back in Jamaica, Mrs. Jorvel Johnson Cunningham. Can you hear me?
Yeah, it's a little, I don't know why.
I'm speaking. Oh,
Maybe
I
if
don't
you
know why I have to speak.
tilt up the mic a little bit, maybe it'll help. Yeah,
Should be a little bit better.
yeah.
All right,
much
that's better.
Thanks, sorry. You said Shoreville, I heard you.
Yeah, it's a Shoreville. Yes. So, with respect to, the bank, I noticed that our disclosure was sent out to, clients that they're going to be increasing mortgage interest rates by 0.6% come July 3. And that just comes immediately after an increase back in July 2022 and a 2.5% increase on variable rate loans, back in January. So, with respect to the cost of funds with Sagicor Bank, that's one query. And also, with respect to Basel III, because I'm not sure, how you're preparing in terms of increasing capital to, meet the expected new standards, basically.
Thank you.
So the question is
So we
about
have one
interest
on-
rates.
Why
Yeah,
have we
so
raised
cost
mortgage
of funding
rates?
initially, basically.
Yeah.
So yes, we increased the rates and it will be again increased in July, but I'm sure, David, you're quite aware of what the BOJ rates have been increased by. So once the BOJ increases their rates, we automatically have to do that. In terms of Basel, the implementation of Basel III will be by at least January 2024. So we are in the process of putting things in place for that.
So the timeline has changed again?
Not officially, but it will be.
Because I recall, hearing from the consultation paper that, they're going to be a 2.5% buffer added on top of that. So,
So we're currently running things simultaneously.
in parallel.
Right? Parallel run now, but it will not be implemented for this year.
So his expectation is that you're going to be increasing retained earnings reserve to increase Tier 1 capital basically going into that period.
The expectation is that we're good.
Come on.
No, but we're right now, as Chauvel said, doing both. We're reporting both, and on the Basel III standard, we're good.
No, I appreciate the clarity also because I heard it was September, now you're in January, so that is why I just added on to that.
Yeah, no.
And follow up with Shoreville. It's for digital wallets. So I have Sagicor, throw their hat into the ring for digital wallets, especially where, Jamdex is concerned, and as Zachary mentioned, digital roadmap.
Right, so that's definitely part of our priority. And a digital wallet is in production. It is being developed in our agile labs, as well as the adoption of CBDC. So a lot more to come by the end of this year.
So I guess that will potentially be integrated along with Alliance, because I recall last year when...
Yeah, absolutely. So Alliance, you're spot on. Alliance will benefit from this development.
And, in respect to Shoreville, why can't clients use ACH online? And, the delay in the rollout of the MasterCard debit card.
We're currently in the process of doing several upgrades, so expect more to come.
Thanks. Mr. Chair, this is towards Mr. Mark Thompson or...
No, I don't think Mark is here.
I'll take it.
Yeah, Chris can take it over.
So AGIC. So you spoke earlier about, the focus on growing the non-motor portfolio, which, is attractive, but with the current reinsurance crisis, like what's going on with respect to AGIC? And also with respect to, the motor portfolio, like what potential increase are you expecting to add on to premiums, considering these excessive claim values that are increasing with all these accidents?
Right, so the costs are going up for reinsurance, as you've rightly said. And we're adjusting our premiums accordingly. The good thing is we have achieved or realized enough reinsurance capacity to continue growing the business, so that's very positive for us. I can only say that Q1, Mr. Chisholm, we were by far the best performer in the general insurance industry, as the IAJ released yesterday or day before.
So what about the motor portfolio in particular?
So the motor portfolio is about de-risking in terms of high-risk portfolios, and it's working. It's a strategy we've had for years, and it's working. So we're trying to stay away from the high claims experience, high-risk portfolios.
Appreciate it. I think just there are questions and a comment for Mr. Maso. So this is to Tara Nunes. Yes. So, the balance sheet for Sagicor Investments shrunk from $116 billion to $99.84 billion last year. And that was mainly impacted by the increase in interest rates impacting the fair value of securities, but also the way the balance sheet was readjusted. So can you give some context in terms of like some relative to last year, and the fact that I saw for investment banking there was a loss for Q1?
Your turn. Quicker.
I think we're going to try to deal more with 2022 than Q1 at this particular meeting, but anyhow.
Hi, David. So, as I believe Chris would have said quite a bit in his presentation, obviously last year was a very difficult year for SIJ, and all the security dealers, in fact, were impacted. And it was driven by the global conditions that impacted the asset prices and significantly impacted our earnings from trading income as we would have had for prior years. So we're still facing the difficult times right now, but we are looking at the other avenues within the business that we can look to grow our fee income, such as our capital markets side, our fee income from asset management, and we're really focusing our energies at that, while Treasury as well looks to continue to rebalance the balance sheet.
And I noticed that, there was also a significant reduction in loans receivable. So was there a focus on also de-risking last year? No, it's but Sagicor Investments. I'm speaking to you, and I have the balance sheet right here on my laptop right now.
Can you repeat the question? I didn't
So
hear.
I saw our loans receivables went down last year from about $4 billion to like $7,000.
Loans receivable. Andre? Yeah.
We'll have to
Let's
come
talk
back
on
to
it.
No,
here.
all
We'll
right.
talk on it.
I think it's core business.
Final question for you, Tara. So there was mention about just the digital roadmap Sir Zaka was speaking about. But last year August there was a negative experience observed with the number 100 listing where there were a lot of hiccups, there was no follow-up communication, and it was just a negative experience. So how is Sagicor is really going to step forward technology, because that experience was not pleasurable for anyone.
Yes, and we certainly regret the experience that customers had. So currently, we're speaking specifically to the IPO platform, which is under review now, and the expectation is we will be seeking to roll out a new and improved version in due course. However, in the interim, we have reviewed our internal processes. We have strengthened the team within our operations department to ensure that we have a much more smooth handling of refunds, because that was particularly where the issues occurred.
And just my question for Omar Brown, one on Sagicor Life, and then
You reach your quota after this question, because we have other people who want to. Omar, yes, go ahead.
So I realized where it said that, Sagicor is looking to become an instant, sorry, not Sagicor, apologies. Alliance is looking to become an instant bill payment provider. So, like, where's the timeline in terms of you returning back to the bill payment space? And, you highlighted, some things like plans to grow for 2023. So they move with Unicoma last year, but like, what's the big plan? And I think it's for Sir Zaka, why the black branding? Why the black branding for Alliance?
Why the what?
The black branding.
Why we didn't like red?
All right, so to answer the first question, so the bill payment platform is built already. Okay. Right, so the bill payment platform is built already. We have tested quite a few of the utility companies. We're ready to go, so within another 30 days or so we should be out.
I appreciate it. And in terms of other major plans for 2023 with the remittance business, like, what are the major plans coming?
Well, we're looking to do direct to bank for this year as well. All right, so yes, we're looking to add a lot of technology to what we're doing now. As you can see, that's where the market is, so you can look out for that. All right?
Thanks. And Sir Zaka, speaking about the branding.
And on branding, you're right. It was a immediate thing. I mean, as you can imagine, we took over a business that was zero. And our first step, Deirdre, was to rebrand in many respects in terms of, the agents and the availability and the service and so on. And over time, we will align the branding standards. But as you can imagine, there's a lot of work going on and a lot of success taking place. So over time.
Thanks. And this is my comment. Welcome, Sir Musso. Did I pronounce that correctly?
Musso.
Very well, thank you. Very kind. I've been part of the Sagicor family for nearly 5 years, but obviously this seat for far fewer than that. So thank you for the kind words.
Congrats on joining the board last quarter, and looking forward to hearing further earnings calls and joining you, in the AGM in 2 weeks, SFC.
Well, I was going to say, if you're a shareholder of SFC, we look forward to seeing you 3 weeks from today at the lovely Hilton in Barbados.
I take a free flight.
Yeah, you'll have to pack your headphones, David, when you go. All right. Thank you very much, David. Thanks for those excellent questions. Mr. Staple? Okay. Coming to you next, sir.
Mr. Chair.
Yes, sir.
Good afternoon. Good afternoon to members of the board and to our fellow shareholders. Good afternoon. Mr. Chair, we must give thanks to our Creator God for taking us safely to this meeting today and for guiding and guarding us all over the pandemic period. We thank the Board of Directors for enabling us to meet face to face so that we can all work together for the good of our company. We thank our hard-working board members and our employees that despite the many challenges, you have enabled our group, Sagicor, to remain a top group in Jamaica. God bless you all. I wish to also thank the auditors for the professional way they have projected themselves and have projected Sagicor as a top group in this country. Mr. Chair, turn me to page 137.
Mr. Holong, I think you should come to the stage in anticipation. Because
Page 137, Mr. Chair. What do you expect to achieve from your continued assessment of IFRS 17? Explain to us what's happening here.
when you say let's make sure we understand your question carefully. All right.
So let me speak.
Okay. You got
So as I said, it's a very significant accounting change. And I must tell you, I meant, and I apologize to the team, to congratulate and thank the financial team headed by Mr. Holong, the actuarial team headed by Kathy Allen and supported by our independent auditor Janet, and the IT team headed by Willard and Howard, as well as a tremendous collaboration with Mr. Musso and his finance, actuarial and IT teams across multiple jurisdictions. It has been a multi-year project at great expense, and the amount of work that was put in was enormous, and a great congratulations. I think I can speak on behalf of all of us for the work that the teams have done across the SFC group. In terms of 17, I gave you some general major changes. The CSM is like a savings account. Watch how that grows year after year. The new treatment of assets, etc. Those are the two major things. Internally, we're going to keep monitoring the results and optimizing by looking at our products, looking at our asset management, our ALM, the liability asset matching, and really just continue to improve on the results under the new standard. So that's what we plan to do.
Mr. Chair, I
that
hear what
answered
you're
your
saying.
question? You're okay with that response, Mr. Staple?
I'm not
Okay.
quite okay, but I will talk to Mr. Zaka after the meeting.
Okay, all right, okay, cool.
Turn me to page 130. Mr. Chair, in 2021, we had total revenue of $103 billion. And this $103 billion cost us $85.5 billion. So out of every dollar, we spent 82 cents to earn this revenue, and we made a profit of 18 cents. In 2022, we generated $114 billion income, revenue, and that $114 billion cost us $97.5 billion, which gave us a net profit of $16.6 billion. Of every dollar of income earned in 2022, we spent 85 cents, and we made a profit of $15 cents. What is interesting, Mr. Chair? Incrementally, that is 22 over 21. For every dollar of revenue earned, we had to spend $1.10. Why was this so?
So the major impact, as Mr. Zaka pointed out earlier, is that we were not able to recognize a lot of security sales. So that made up a huge part of our revenue in previous years, you know, the turmoil in the markets and so on. And that is like the big thing. So that's a continuing trend throughout the whole of the financial statements. The auditors have pointed that out as well as a key audit matter. The fall in securities prices, it affects our balance sheet, affects our equity, and it has affected our earnings as well.
So am I correct in saying, Mr. Chair, that in 2022, our incremental revenue earned, all of it went into expenses? Am I correct?
If you're saying that the income wins the expenses, I think you're incorrect. What I was pointing out is that revenue is less because of conditions in the market. So there are opportunities for sales of securities that happened in 2021 that would not have happened in 2022.
So, Mr. Chair.
That's about $9 billion around.
Mr. Chair, from my vantage point, there's nothing that is going to change in the economy within the next 10 years. So am I correct in saying that we are not going to go forward as far as Sagicor Group is concerned in the next 10 years?
Well, I hope you're wrong on the next 10 years, truthfully, Mr. Staple. No, but I think we're well set to, I mean, we still had a very creditable year, I believe, given the hardships of 2022. So is it that you feel that was you were dissatisfied with the performance in 2022?
Mr. Chair, as far as I'm concerned, if in 2022, so far, whatever income that was earned went straight back to expenses, we didn't make any profit on the surplus, on the increment that was earned. So as far as I'm concerned, for the next 10 years, it's going to be very challenging, Mr. Chair.
So we are not looking at 10 years of continued headwinds in the macroeconomic situation. We think this year will start to show improvements. The Bank of Jamaica has spoken to a reduction in inflation. They have paused on interest rate increases. We have to look to the overseas, the global economy, and be cautious. But as I said, we are diversified. We have geographic and product type diversification, business line diversification. And as I said, we remain supremely confident that we will continue to be resilient and give shareholders a good return, including dividend return. You like that one, don't it?
Yes.
Good.
Mr. Chair, I'm very pessimistic about what happened in the world today. And I'm saying the United States and other large countries of the world are having serious problems, which is impacting on us. And I do not see us getting out of this problem for the next 10 years. We are in serious problem.
Okay, sir, I appreciate your view, and I don't have the crystal ball, but I appreciate your view. And I think even in our statements, we have said we're proceeding conservatively. You know, I have a very conservative risk posture, so we do expect some further volatility. But I certainly hope that we'll see some improvements in the economy in the next.
Not for the next 10 years, Mr. Chair.
But I hear you, sir. Who am
Turn
I
me to
to
page
say?
156, Mr. Chair. Page 156. Investment banking was reduced from 126 million in 2021 to 118 billion in 2022. Explain what is happening here.
I think Tara gave her comments. In that line of business, if you don't have securities that you can sell, you're going to make less revenue. You also had increase in interest rates. That means your cost of funds and your margins would have been reduced in 2022. Those are the big things that affected that unit.
And I would say also that, you know, fee income from market activity, you know, where we make the market in various, you know, deals, etc. The deal flow was really turned down in that period. So that also is kind of our third leg of the stool was also impacted negatively. So.
Mr. Chair, turn me to page 160. What accounted for this reduction in corporate debt instruments in Trinidad, USA, Canada, and other? Page 160. What accounted for this reduction in corporate debt instruments in Trinidad, USA, Canada, and others?
So it's the same thing as we've been talking about. When you have increase in interest rates, you're going to have mark-to-market impact on your balance sheet and on your corporate debt particularly. So it's not as if we got rid of all of it, but the value of it fell. So the price of those securities fell, and that's reflected here.
So, Mr. Chair, as I said earlier on, for the next 10 years, we are going to see some serious deflation in the economy. How is this going to impact on us?
Mr. Staple, I repeat, and I hope you're wrong, and I believe you're wrong. We are a resilient organization, diversified with an amazing team, great governance, and we continue to search out new areas of business, new geographic locations, etc. And we think that for the past, I don't know if it could be worse than the past 4 years.
It is going to be.
Well, I don't think so, but even if it is, we will do all right. So keep your shares.
I'm not selling them.
All right.
Mr. Chair.
We should have started with that, Mr. Staple. All right, I'm going to give you two more questions. I know you've done your research, so but two more questions, and we'll move on.
On page 220. Page 220. Why has the group been cautious in deploying liquidity in clients' segment consolidation? Why has the group been cautious in deploying liquidity in client segment consolidation?
Where is that? Which paragraph is that, sir?
Yeah.
Page 220.
Oh.
So you're asking why we are cautious? Well, you know, market conditions require that we are to be more cautious. I think that, you know, the conditions of huge volatility at the time, we would not have known where the Fed was going to raise interest rates to. There was no ceiling mentioned. The projections were all over the place, and I think that it's just prudent management.
I mean, as you know, Mr. Staple, in the financial sector, liquidity is king in tough times, so we really wanted to marshal our liquidity carefully, and
All
hence
right.
that statement.
Okay. Turn me to page 130.
back to 130 now.
Explain what result in this difference in net movement in actual liabilities, moving from a positive 4.2 billion to a negative of 3.8 billion. What's happening here?
So there's a detailed note on it. Note 40, I believe. Where is that?
Are you with me?
Yes, there is a detailed note that explains the movements. Did you take a look at that? So maybe if you take a look at note 40 and the note 32, you will see the changes there and the changes in assumptions. They're listed.
Okay, we'll talk about it.
It's going to take us some time, but offline we can take that once you study those two notes.
Right. And lastly, Mr. Chair, lastly,
Yes, sir.
with the poor position that NCB is in, I think you should be trying to buy NCB.
So let me say this. Let me say this. Our treasury, our balance sheet, and our funds invest in NCB debt and equity. We monitor them as we do all our investments, and NCB is a company we have confidence in, and we will continue to evaluate them, but it's a solid plank of our financial and economy in Jamaica.
Mr. Chair, I think you should seriously think about buying them.
Okay. All right, Mr. Stapler, I appreciate that. Yes, sir. Thank you for your contributions.
Afternoon. Although this is a shareholder meeting, I would like to make commendation to some persons, because as an accountant in a government business, we have an account in Sagicor. The commendation goes to Tanisha Harrison, Simone Rowan, and the team from Sagicor Bank in New Kingston, because they make my bank reconciliation very good every month. So I must make commendation to them.
We'll have to make sure Cherbel passes that on to the team.
And
Thank you.
they are easy to get through to, and they do answer emails. Like, even when sometimes they send me and I don't answer them immediately, they do, and they're easy to work with. So I must make commendation to them.
We appreciate
so
that.
Simone, Tanisha, and the team from the Kingston and St. Andrew Parish Court, Accountant Deon Francis, I must say thank you. You make my work easy every month.
Thank you. Thank you very, very much for that. I appreciate that. Yes, sir. Can you just make sure you just state your name before you ask?
Afternoon, Everton McNaught, shareholder.
Thank you, Everton.
I want to share something with you that we need to be mindful of. Shareholders and investors in recent times are coming out of the passive mode, all right, based on what is happening in the market. Nervousness, driven by what happened to one of our financial institutions, which will remain nameless. So what I need to happen, in recent times, some of your success pillars, they have gotten shaken up a bit. We see people writing in the paper questioning your key personnel and some of your operating systems. Those are important. The financial pillar got shaken up a bit. 21 over 22, not looking so good. All right, and it carries over into Q1 2023. So we have to be mindful. There are certain approaches that we need to adopt. One, include some more substance over the farm. And two, we need to embrace some of what is trending in our product push. Very important. Failing to do that, our most important asset, which is not on your balance sheet, can be diluted. That asset is called Sagicor. So we have to guard it and protect it. All right?
Thank you for that advice.
Thank you. And Everton was a former very valuable team member of Sagicor, so we need to listen carefully to what he's saying, and we fully adopt what he's saying.
Wait. Well, no, you have to let this other gentleman come before you, Mr. Rose, because he hasn't got to ask a question yet.
Pleasant good afternoon. Lancel Bloomfield is the name.
Hi, Mr. Bloomfield.
Page 200, note 41. Admin expenses. Mr. Chairman, in 2021, there was an expenditure of $2.145 billion for electronic channels charges. And in 2022, an expenditure of $2.433 billion for the same line item. Please clarify what this line item is about.
That's your credit card.
So this is one of the ones that you don't mind going up. What happens with it is when you have electronics channels charge, it's really a sharing of a fee. When you use a credit card or a debit card, there's a charge. And part of that charge goes back to Visa and MasterCard or whoever the underlying provider is of the service. So if we do more business through electronic channels, which is, point of sale, that type of thing, we earn more and we have to pay more to the provider.
Understood. Page 193, note 31, other liabilities. In 2022, there is an amount of $854.280 million for unearned reinsurance commissions. Please clarify what this line item is about.
So that's largely related to the general insurance business. So what happens is once we write an insurance policy for a house or a building, we would reinsure that with an overseas entity. We have to pay them a reinsurance premium, and as a reward for us placing the business with them, they would give us a commission.
Understood. My last question. What is this company position on the provision of immediate annuities to an investor? And can said investor obtain same and at what age?
We actually do sell immediate annuities on the market. Once upon a time, we used to primarily sell it just to our pension customers, but now an average customer can walk into Sagicor Life, contact our agent or contact us directly and purchase an immediate annuity. So we can facilitate that transaction.
Is there an age limit to the transaction?
No, not on paper, no, but after a while, when you reach a certain age, I'm not sure if you'd want to, but we currently have no age limit for anybody who wants to purchase an immediate. A lifetime annuity, I'm assuming you're speaking about.
Yes, sir.
We have no limit right now.
Okay. Can I see an agent after the meeting?
Can set you up. No problem.
Thank you very much, sir.
That last question is the kind of question we like to get. Thank you. All right, Mr. Rose, I've given you one more because it's now 5 and we're supposed to end at 5. One more question. So, and then anything else we'd answer offline for you.
All right. So, based on the lack of time, I guess, this can be directed to Howard Gordon if he's present.
There he is. Come, Mr. Gordon.
Hey, it's your time to shine. Everybody has to get up. So, this is a question from last year, but it's irrelevant today. Why haven't you seen, more either connected platforms or, the option to, why haven't you seen more like connected platforms or, the ability for, certain services, like account opening services for like, Sagicor investments, for example. So, you can go to Sagicor Bank and open a bank account, but you can't do the same with an investment account. And, it is about the unification of services. Like, that's, a major query. And, just being able to do certain things digitally Sagicor, I know, like Zaka mentioned, a roadmap, but like that whole interconnectivity.
All right. Well, you're really describing the roadmap. So it's coming, and it's coming quickly. So we have to start with different segments of the organization because, as you said, it wasn't there last year. We're building that roadmap now, and we will roll out different sections of it as we go along. That's all I can tell you. It's not here. It's coming. Just wait and see.
No, so you mentioned this roadmap, and I said I'm kind of describing it, but like, what does that really entail?
I can't give you that. But what I can tell you is that we have a clear roadmap, milestones, activities that we will roll out. What we'd ask you to do is that we'll have testing along the way where we invite external persons to come in and tell us, is this exactly what you want? How are we trending to what your expectations are? So we're looking to see you in the lab.
All right, I'll take another ticket there.
Huh?
I'll take a ticket to that lab.
Not a problem.
That's a direct invitation.
Thanks, Chairman.
All right. Thank you, Mr. Rose. Thank you, everybody, for the excellent questions and the participation and feedback. Really, really appreciated.
It would be great to get some, guidance from Mr. Masso for the Sagicor Group Jamaica in terms of investor relations that can definitely be improved.
Yeah, well, you can go up to him and ask him that after the meeting, but we really have to move on now because we are running out of time. So, since we have finished our question section now, I'd like to put to the vote for the resolution of the adoption of the audited accounts for the year ended December 31, 2022, and the reports of the directors and auditors thereon before the meeting. So the resolution I'm putting forward is that the audited accounts and the reports of the directors and auditors for the year ended December 31, 2022 are hereby adopted. Do I have a proposal? Mr. Staple, thank you. Mr. Brown, okay. Okay, we have to give you a name there at the back. Thank you. All in favor? Any against? Okay, so the ayes have it. So that motion is carried. We now want a re-election of directors. I'm going to move through this quickly. So we have resolutions 2 and 3 on the agenda, which is the re-election of directors. And we have the profiles of the directors, the summaries of their profiles on page 18 to 23 of the annual report. So by Article 98 of the Company's Articles of Incorporation, provides that 1/3 of the directors, or if their number is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under this article are directors Mr. Stephen Facey, Dr. Marjorie Fife Campbell, Mr. Gilbert Paltier, and Dr. Jacqueline Coke-Lloyd, who retire by rotation and are eligible for re-election. Article 96 of the Company's Articles of Incorporation provides that the director shall have the power at any time and from time to time to appoint any person to be a director of the board, either to fill a casual vacancy or as an addition to the board. The directors retiring under this article are directors Mr. Andre Masso and Ms. Joanna Banks, who, being eligible, offer themselves for re-election. So, first of all, I'd like to seek the permission of the meeting to have the directors appointed en bloc. So I need a motion for that. So may I have a motion to consider, and if thought fit, hold on, I just have to read it out, that the election of directors be made en bloc. Thank you, sir. Make sure you get... Mark, you got that? And John is second. Okay, thank you. Resolution is passed. I'm assuming everybody in favor, nobody against. Okay, so motion carried. So the meeting having agreed, I'll now put the following resolutions to the meeting. Resolution 3, that directors Stephen Facey, Marjorie Fife Campbell, Gilbert Paltier, and Jacqueline Coke-Lloyd, who retire by rotation and are eligible for re-election, be and are hereby re-elected as directors of the company en bloc. Proposer? Thank you. Seconder? Thank you, sir. Those in favor, so everybody in favor? Any against? Okay, the ayes have it, so motion carried. And that directors Andre Masso and Joanna Banks be and are hereby re-elected as directors of the company en bloc. Proposer? Thank you, sir. Mr. Rose? Thank you, Dan. All in favor? Okay, any against? All right, the ayes have it again. So welcome back to those directors. Now we're on to item 7, which is the remuneration of directors. And the next resolution before the meeting is that the amount of Jamaican 38,701,005.69, so 38.7 million, included in the audited accounts of the company for the year ended December 31, 2022, as remuneration for their services as directors, be and is hereby approved. So can I have a proposer for that resolution? Thank you, sir. Mr. McNabb. McNaught, sorry. Seconder. Mr. Holong, thank you. All in favor? Any against? Okay, again, motion carried. Thank you very much. We're now on to the remuneration of the auditors. I now move, this deals with the appointment of the auditors first. Our auditors, Messrs. PricewaterhouseCoopers, Chartered Accountants, have expressed their willingness to continue in office and will do so in accordance with the provisions of the Companies Act. The meeting is being asked to authorize the directors to fix the remuneration of the auditors. So the resolution before us is that PricewaterhouseCoopers, Chartered Accountants, having agreed to continue in office as auditors, be and are hereby appointed auditors for the company to hold office until the conclusion of the next annual general meeting at a remuneration to be fixed by the directors of the companies. May I have a proposer for that? Thank you. Mr. Rose, second. Thank you very much. Okay, all in favor? Any against? Okay, thank you. Motion carried. And I think finally, no, not finally. The final agenda item deals with the ratification of dividends. So during 2022, the company paid 2 interim dividends, and the meeting is being asked to adopt the following resolution to ratify and declare the payment of the interim dividends as final for 2022. Thank you, sir. So proposer for that motion, seconder. Thank you. And those in favor? And any against? Okay, ayes have it. Motion carried. I now move on to termination, item 10. And I think the food is getting cold, so we need to move quickly. This concludes our formal business for this meeting, and I thank everyone for their interest and support. I will now call for the termination of this meeting. Could somebody propose for the termination? Thank you, Mr. Brown. Thank you, Mr. Rose. Okay, so I declare the motion carried and declare this 9th annual general meeting of the company terminated. Thanks, everybody, for your attendance. I look forward to seeing you next year. Thank you very much.